A trading styles explained. Which one is right for you? Welcome to MarketIQBasics. One of the first decisions every new trader faces is, what kind of trader do I want to be? Do I hold trades for weeks, days, hours, or just a few minutes? In this video, we're going to break down the 4 main trading styles: positional, swing, intraday, and scalp trading, covering the risks, the rewards, and the money management rules that apply to each one. Let's get into it. Why your trading style matters. Your trading style determines everything. How much time you spend in front of the screen, how much stress you experience, how many trades you place, and ultimately how you manage your risk. Choosing the wrong style for your personality and lifestyle is one of the most common reasons beginners fail. So let's find the right fit for you. Trading Style 1. Positional Trading. Positional trading, also called position trading, is the longest term of all trading styles. A positional trader holds trades for weeks, months, or even longer. They are not concerned with short-term price fluctuations. They are looking at the big picture, the overall trend of a market over a long period of time. Positional traders typically analyze weekly and monthly charts. They use fundamental analysis, looking at economic data, company earnings, and global events, alongside technical analysis to make their decisions. The risks of positional trading include overnight risk, the possibility that markets move against you while you sleep, and the fact that your capital is tied up for long periods. However, because trades are held for so long, the day-to-day noise of the market matters less. Money management for positional trading. Because you're holding for longer, your stop loss will naturally be wider. A positional trader might risk 1 to 2% of their total account per trade, with stop losses potentially hundreds of points away. Position sizing is critical here. Never let a single trade put more than 2% of your account at risk, no matter how confident you feel. Positional trading suits people with patience, a long-term mindset, and those who cannot monitor screens all day, such as full-time employees. Trading Style 2. Swing Trading. Swing trading sits in the middle ground. A swing trader holds positions for a few days to a few weeks, aiming to capture one clean price swing, a move from one level to another. Swing traders use daily and 4-hour charts primarily. They look for clear trends, support and resistance levels, and chart patterns to identify entry points. They place their trade, set their stop loss and take profit, and then step back and let it run. The risks of swing trading include overnight and weekend risk. Markets can gap significantly over weekends on unexpected news. Always be aware of major economic events and news releases that could impact your trade while you're not watching. Money management for swing trading. Risk no more than 1 to 2% of your account per trade. Because you're holding overnight, reduce your position size compared to intraday trading to account for the additional risk. If you're trading gold with a $30 maximum loss per trade, as we discussed in our paper trading video, that principle still applies here. Know your maximum loss before you enter. Swing trading suits people with moderate time availability. You don't need to watch the screen all day. Just check in once or twice daily. Trading Style 3. Intraday Trading. Intraday trading, also called day trading, means all trades are opened and closed within the same trading day. No positions are held overnight. You start each day with a clean slate. Intraday traders use 1-hour, 15-minute, and 5-minute charts. They look for momentum, breakouts, and short-term trends during the trading session. The goal is to capture several smaller moves throughout the day and close everything before the market closes. The risks of intraday trading are significant. You need to be fully focused and present during market hours. Emotional decisions happen fast. The market can move against you in seconds. Transaction costs add up with frequent trading, so always factor in spreads and commissions. Money management for intraday trading. This is where discipline is absolutely critical. Use the framework we set in our paper trading video. Maximum loss per day, $100. Maximum loss per trade, $30. 3 trades maximum per day. If you hit your daily loss limit, stop. No revenge trading. No trying to win it back. The market will be there tomorrow. Position sizing for intraday trading must be tight. Because you're trading on shorter timeframes with faster price movements, smaller position sizes protect you from being wiped out by a sudden spike. Always calculate your position size based on your stop-loss distance, not on how much profit you hope to make. Intraday trading suits people who can dedicate several focused hours to trading during market hours and who have strong emotional discipline. Trading Style 4. Scalp Trading. Scalp trading is the most intense of all trading styles. A scalper holds trades for seconds to minutes, aiming to capture tiny price movements repeatedly throughout the day. A scalper might place 10, 20, or even 50 trades in a single session. Scalpers use 1-minute and tick charts. They need lightning-fast execution, razor-sharp focus, and an iron discipline with risk management. Even one bad trade without a stop-loss can wipe out an entire day's profits. The risks of scalping are the highest of any trading style. The speed of decision-making leaves little room for error. Transaction costs, spreads, and commissions eat into profits significantly because of the high volume of trades. Scalping also requires a high-quality broker with fast execution and tight spreads. Money management for scalping. Because you're placing so many trades, your risk per trade must be extremely small. Many professional scalpers risk as little as 0.5% or less per trade. With our paper trading framework, a scalper might set a maximum of $10 per trade rather than $30, and a strict daily stop of $50 until consistently profitable. Position sizing must be calculated precisely on every single trade without exception. Scalping suits very few beginners. It requires experience, emotional control, and a deep understanding of short-term price behavior. If you're a beginner, do not start with scalping. Build your foundations first. The one rule that applies to every trading style. No matter which style you choose, positional, swing, intraday, or scalp, one rule never changes. Never risk more than you can afford to lose on any single trade. Always know your maximum loss before you enter. Always use a stop loss. Always calculate your position size based on your risk, not your greed. The traders who survive long-term are not the most intelligent or the most aggressive. They are the most disciplined. Risk management and position sizing are not optional extras. They are the difference between a trading career and a blown account. Which style is right for you? Ask yourself these questions. How much time can I dedicate to trading each day? How do I handle stress? Am I calm under pressure or do I panic? Am I patient enough to hold a trade for weeks, or do I need to see results quickly? Can I afford to have capital tied up for long periods? If you're a beginner with a full-time job, start with swing trading. It requires the least screen time, gives you space to think, and still provides plenty of learning opportunities. As your skills grow, you can explore intraday trading. Leave scalping until you have real experience under your belt. Final thoughts. Every successful trader started exactly where you are now, confused, curious, and learning. The key is to pick one style, master it completely, and never compromise on your money management rules. Do not jump between styles chasing quick profits. Consistency in your approach is what builds a profitable trader over time. At MarketIQBasics, we cover every aspect of trading and investing from the ground up. If this video helped you, please like, subscribe, and share it with someone who's just starting their trading journey. And check out our paper trading video in the description to start practicing these styles right now for free. See you in the next one. Subscribe for weekly beginner investing and trading videos, new content every week.